Now, China's ruling Communist Party unveils a new leadership lineup today to steer the world's second largest economy for the next 5 years. And to talk more with us about China's economy under a new leadership is Leon Pereira of Spire Research and Consulting. Morning to you, Leon. First question, should China's new leadership open its doors to more competition and shake up state-controlled companies to achieve sustainable growth?
Well, some sectors are actually open to competition already. That's thanks to WTO accession about 10 years ago. Some of them are quite open and competitive. There are a few sectors that are not. Telecommunications and banking are two of the most important ones. The economy would certainly benefit from more liberalization in these sectors. Low and middle income Chinese would benefit from better interest rate on their deposits. As for the state-owned enterprises, the main issue there is their privileged access to loans from state banks as well as IPO listings, basically to capital markets. And there, I think the huge benefit to the economy would come if that was made more competitive so that the best and most value-creating companies could actually get those loans and get those IPO listings. That would yield tremendous benefits, I think, to both ordinary citizens and the economy.
Okay, do you see them taking some steps to boost sagging growth in the near term, or no policy changes?
I think they will continue the current measures that have been put in place to manage economic growth. There is what I would call stealth fiscal stimulus, which is increases in construction spending, public infrastructure, without a big bang announcement. They've been pushing more bank loans. There could be some easing of monetary policy. Those things will continue. I think it is in the nature of Chinese politics that we will not see anything that is too sudden and too dramatic a change at this time of leadership transition. That is generally not the way that Chinese politics works.
What about the country's financial system? Does it need some big changes to help fix some broader social problems like the gap between rich and poor?
Well, those social problems are weighing heavily on the minds of decision makers for sure. Liberalizing banking is something that they should definitely look at so that ordinary Chinese can get better interest rates on their deposits. Healthcare reform is another thing. They've begun to address that. Better risk pooling and social safety nets for retirement, I think, is another thing that needs more concerted action. And lastly, and quite importantly, I think, spreading the funds around to local government authorities so that the richer local governments actually can support those that have less funds. I think this would go a long way towards promoting economic and political stability.
Okay, let's talk about what's going to happen in 2013. Is the country's economy going to strengthen? And do you think the days of above 8% GDP growth are over?
Well, I think the days of 9+% GDP growth are definitely over. In Spire, we expect China to post a GDP growth broadly in the range of about 7%, at the low end to about 8.5%, on the high end for the next few years. Next year, I think the GDP growth in China, we're looking at a broadly flat picture. The domestic sector is quite healthy thanks to rising wages and to some extent healthcare reform. The international sector will still be quite muted. So on balance, rather flat next year.
Okay, let's turn to the currency then. Do you think the yuan can become a global currency without the country fully opening up its capital account?
Well, the short answer to that is no. I think international investors, traders, sovereign wealth funds, they do need full convertibility if they are to hold significant amounts of RMB as a reserve currency. If major transactions are going to be settled in RMB, I think this needs to happen. I think the Chinese authorities do realize that. Even though there has been a blueprint floated for fully opening up the capital account within 10 years, I think in the short term, for the next few years, there will be only gradual and limited further opening. And what this means is that globally, China's RMB will become a currency of some interest. To some extent, it will become a global currency, but it will not be by any means a major global currency.
Well, the RMB did hit a record high against the dollar this week. Do you see further gains in the near term?
Well, we do see further gains in the medium term. There is still upside there for the RMB to appreciate against the US dollar. That is partly because of events going on in the US with quantitative easing that will weaken the dollar. But we don't see any sudden and dramatic change happening on that front, at least in the next 3 months or so. And that's really because the leadership transition is so fresh, and it's in the nature of Chinese politics that when new leaders come in, they try not to make such a sudden or dramatic change. That is actually a negative comment on their predecessors.
Will this strengthening damage China's export competitiveness, do you think? And even though the economy is showing signs of recovery?
Well, I think the currency appreciation is not going to be a major factor damaging competitiveness. Rising wages are probably more of an issue. There are some other factors, for example, the anti-Japanese protest. That's really going to affect FDI from Japan. The exchange rate is probably more of an issue for some of the exporters operating in Guangdong province in sectors like footwear and apparel and textiles, who are operating on very, very low margins, and they may lose out a bit to the likes of Bangladesh, Sri Lanka, and some of the Southeast Asian countries.
All right, last question for you then. The Shanghai Composite's down around 7% year to date. Do you see some value emerging in some of the cyclical and policy-driven stocks?
We do see some value in the next 3 to 6 months in the construction sector. So construction companies, I think, should benefit from that as the government continues its policy of what I call stealth fiscal stimulus, more public infrastructure projects and construction, particularly in the west and the southwest of the country.
All right, thanks very much indeed for that, Leon. That was Leon Pereira of Spire Research and Consulting.